analysis. Now, when talk about ratio analysis, this is a tool which entails now the computation of various ratios using the information in the statement of cash flow, of which now the ratios which are computed using that information in the statement of cash flow, those ratios are usually classified into five main categories. But first of all, what you have said is that this entails computation of various ratios using a statement of cash flow information, information, and those particular ratios which are computed using the statement of cash flow information, they are usually classified into five categories. So mean that we can say that the cash flow ratios are classified into five categories, namely, are classified into five categories, which are namely, number one, we do have ratios which are known as the profitability ratios. Profitability ratios. Now, in our case here, when we talk about profitability ratios, these are those particular ratios which will be computed using the information in the statement of cash flow, basically to be able to establish how a company performed, or maybe the performance of an entity, maybe in a given year, or basically we can be able then to compare the performance of an entity over 2 years. Then two, we do have what we refer as the liquidity ratios. Now, for these particular ratios here, they are computed basically to evaluate the ability of the business to be able to pay its short-term debt whenever they fall due. Number three, we have efficiency. These ratios are also known as activity ratios. Now, for the activity or efficiency ratios, they are computed now to determine how well, or to determine how efficient a company used its asset to generate a return now to the owners, or basically to generate a profit to the owners. And then from there we have solvency ratios. And when talk about solvency ratios, these are those particular ratios which are computed basically to evaluate the extent to which now an entity is financed by both the debt capital and also what we refer as the share capital. So mean that in that case we have those four categories, not five, should be four categories of the cash flow ratios.